Good morning, friends. Welcome back to our continuing journey through the Forensic Accounting and Investigation Standards, FAIS, issued by the Institute of Chartered Accountants of India. Myself, C.A. Bhupesh Khanna. Today, we explore a standard that is central to the forensic thought process, FAIS 140, Applying Hypotheses. This standard takes us from merely identifying issues to constructing and testing investigative theories. First one is Purpose of FAIS 140. This standard is designed to help forensic professionals develop logical hypotheses or scenarios about potential fraud, misconduct, or irregularities. Use these hypotheses to guide the investigation and evidence-gathering process. Apply a methodical and objective approach to testing and refining these hypotheses. Second, we are going to discuss what is a hypothesis in forensic accounting. In forensic terms, a hypothesis is a proposed explanation for a set of observed facts or red flags, which is then tested through evidence. Example, if large inventory write-offs coincide with changes in warehouse staff, a possible hypothesis is inventory misappropriation occurred during a period of weak controls following staffing changes. Next one is the hypothesis cycle. As per FAIS 140, this standard outlines a cyclical approach to hypothesis application. 1. Formulate initial hypotheses based on available facts, complaints, audit reports, or red flags. 2. Design procedures to test each hypothesis. 3. Gather evidence through interviews, documents, digital data, etc. 4. Analyze findings to accept, reject, or refine hypotheses. 5. Document reasoning and conclusions for each tested hypothesis. This cycle continues until a coherent and supportable conclusion is reached. Now we will discuss characteristics of a good forensic hypothesis. According to FAIS 140, a hypothesis should be plausible and grounded in the facts, specific and testable, flexible, capable of being modified as new information arises, free from bias, based on objective reasoning, not assumptions. Next is red flags and hypothesis formation. Red flags often serve as a trigger for hypothesis development. Example, red flag, a vendor has won all tenders in the past 12 months. Hypothesis, there may be collusion or favoritism in the procurement process. From there, procedures would be developed to test this hypothesis, such as reviewing bid documentation or analyzing vendor relationships. Now we will discuss tools and techniques for testing. Hypotheses FAIS 140 encourages use of data analytics and forensic tools, digital forensic techniques, document reviews, employee interviews, trend and ratio analysis, cross-functional collaboration, e.g., HR, IT, legal. Next is documentation requirements under FAIS 140. As with all FAIS standards, documentation is crucial. Professionals must record all formulated hypotheses and the reasoning behind them, testing procedures applied and evidence obtained, results of each test and the resulting conclusion, modifications to hypotheses, if any. This ensures transparency and supports the credibility of the final findings. Next is key takeaways for CA students. Hypotheses are not guesses. They are evidence-informed theories that guide investigation. Testing hypotheses ensures focus, efficiency, and objectivity. FAIS 140 teaches you to approach fraud investigations like a detective, methodical, unbiased, and evidence-driven. In last closing statement, to conclude, FAIS 140, applying hypotheses, empowers you to think critically, act methodically, and investigate with precision. As future chartered accountants involved in forensic matters, this structured thinking will be your greatest tool in uncovering the truth. Thank you, and keep practicing the art and science of forensic inquiry.